In this video, I'm revealing the best strategy that you can use with MACD indicator. Let's jump into it. The Moving Average Convergence Divergence, also known as the MACD, is one of the simplest and most popular indicator among professional traders. Basically, it is a trend-following indicator that shows the relationship between the two moving averages. So first, let's add it to our chart. Go to the Indicator tab in TradingView and type in MACD. Click this one on the top. Before we start, we first need to understand how the MACD works. There are four parts to the MACD indicator. First, we have these two lines, the MACD line and the signal line. Notice the difference between these two. The MACD line moves faster and is more sensitive to the price changes, and is the main focus of the MACD indicator. Then we have the signal line, which reacts slower to the price compared to the MACD line, giving it somewhat smoother appearance. The histogram represents the difference between the MACD line and the signal line. For example, if the MACD line crosses above the signal line, the histogram will turn green, and if it crosses below, the histogram will turn red. The gap between the MACD line and the signal line also affects the size of the histogram. If the two lines are further apart, the histogram gets bigger, and if the two lines get closer, the histogram becomes smaller. Finally, we have the zero line, which simply represents the center of the MACD indicator. Now, the way the traders use the indicator to identify momentum is by looking at the crossover between the MACD line and the signal line. Let me show you an example. If the MACD line crosses above the signal line, it indicates that the market is in an upward momentum. And if it crosses below, it indicates that the market is in a downward momentum. Traders can also utilize the size of the histogram to determine the strength of the momentum. If the MACD crosses above the signal line and the histogram is getting larger, it shows the upward momentum is very strong. And if the histogram is getting smaller, it shows the uptrend momentum is getting weaker. Now, we've already established the MACD is based on the moving averages. So the question is, why should you use the MACD and not the moving average? Well, let me give you a quick comparison. Here we have the MACD set to the default setting 12 and 26. And over here we also have two exponential moving averages set to the same values as the MACD. Notice the correlation between the two indicators. Every time we have a crossover on the moving averages, we also have a crossover on the MACD. But it's between the MACD line and the zero line. Remember, what we look for in the MACD is not the zero line, but rather the crossover between the MACD line and the signal line. As you can see, the crossover on the MACD gave a much earlier signal compared to the crossover on the EMA lines. That's why me and many other traders prefer the MACD as the momentum indicator. Now let's go over different MACD strategies that we can use as traders. First, a common mistake that traders make is using the indicator by itself. Let me show you why it's a very bad idea to use the MACD alone. Here we can see that the overall market is in a downtrend. However, the MACD is crossing over to the upside. Notice how the signals are contradicting. The MACD is indicating a bullish momentum, but the market is in a downtrend. This is exactly why you shouldn't use the MACD by itself, because what the MACD is showing us is only the short-term trend momentum. As traders, we also need to take the long-term trend into consideration because we never want to trade against a trend. A simple but high win rate strategy that I recommend for beginners is by combining the MACD with a long-term trend indicator like the 100 EMA. This way we can safely trade the MACD while making sure that we are staying within the same direction of the long-term trend. The first step is to identify the long-term trend by looking at the 100 EMA. If the price is above 100 EMA, it indicates that the long-term trend is up, and if the price is below the 100 EMA, it indicates that the long-term trend is down. Once you have identified the trend, the next step is to look for crossovers on the MACD that shows the same signal as the long-term trend. In this particular example, we can see that the long-term trend is up, meaning we only take signals when the MACD crosses over to the upside. Here's where you want to take a long position. For your exit strategy, place your stop loss at the nearest swing low and set your profit target at 1.5 times your stop loss. And this trade ended up being a profitable trade. Let's look at another example, shall we? In this chart, we can see that the price is below the 100 EMA, indicating that the long-term trend is down. Next, we have a cross down on the MACD. So this will be our entry signal to go short. For the stop loss, place it above the nearest swing high and set the profit target at 1.5 times your stop loss. As you can see, the price hit our profit target, making this a successful trade. So that was a very simple MACD strategy that you can use. For advanced traders, if you want to get more profit using the MACD, you can't simply rely on beginner crossover techniques. Always remember, crossovers tend to work in trending markets. If the market is in a range, the indicator will give you many false signals. That's why if you want to increase the win rate, I recommend using a more advanced version of the strategy by combining the MACD with price action. Here's how the strategy works. The first step is to choose a time frame. In this case, we are using the 4-hour time frame. Next, identify a key level within this time frame. As you can see, the price went up, hit, and reversed downwards. So we can draw a resistance line here. The next step is to wait for price to approach the same key level again. When this happens, we expect the price to reverse downwards. However, just because the price touches a key level doesn't guarantee a reversal, because key levels aren't magic. Price can always break through these key levels. That's why we need to use extra confirmation to make sure there is actual downward momentum as the price touches these areas. This is where our MACD indicator comes to play. Most traders wait for the MACD to cross over downwards before taking a short position. However, by doing this, the downtrend movement has already been played out and we would have been late to the party. A secret trick I use to get an earlier entry signal is by zooming in 2 time frames below. For example, if I'm currently in a 4-hour chart, I zoom in to the 2-hour chart. Then on the 2-hour chart, I wait for the MACD to cross over downwards and take a short position there. Go back to the 4-hour chart and compare the 2 entry signals. If we use the 2-hour time frame crossover, we would have entered here. But if we use the 4-hour time frame crossover, we would have entered here. The smaller time frame crossover provides an earlier entry signal. Now let's go over another example. We are on the 2-hour time frame. Looking at the left, we can see that price went down, found support and reversed, making this area a good support area. So when price revisit this area, we want to confirm that there is actually a bullish momentum. So once again, we want to zoom in 2 time frame below and find our MACD indicator. So now all we have to do is confirm the bullish momentum by MACD crossing over to the upside. Once confirmed, we take the long position. Again, we go to the 2-hour time frame and apply our exit strategy by putting the stop loss below the recent swing low and putting the take profit 1.5 bigger than the stop loss. And voila, this trade ended up being profitable. I just revealed some of the highest win rate MACD strategies that you can use immediately. If you found this helpful, please like the video and subscribe to the channel. It only takes 2 clicks and is the best way to support the channel. Also, check out my other videos. I'm sure you'll find some values in them. Thank you for watching and I'll see you in the next video.